Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be jumping in and we are going to be talking about swing trading. Now, for those of you that are new to the channel, my name is Carter. I've been a full-time swing trader for over 6 years, and I wanted to make a video pretty much showing you guys pretty much how I go about determining if I should buy a stocks and my strategy, and pretty much it's going to be like a little guide for you to get started with that process of swing trading. So I hope you guys all enjoy it. If you have any questions, feel free to ask down below. And if you guys want to learn more about swing trading and trading in the market, I highly recommend going on and checking out my amazing swing trading school, where you guys can learn how to find stocks that we're going to be talking about today and different strategies and mindset and the emotion side when it comes to swing trading in the market. It's absolutely fantastic. And you guys can use code YouTube, all caps, to get 20% off. And I'll see you in there, guys. It's absolutely worth it. And trust me, I know right now people are commenting, Carter, why would you ever sell a course? Hey, if I was getting started with swing trading, I wish I had a course that helped guide me in the right directions to get started. That's why I do it. It's not scammy or anything like that. So check it out down below. There's testimonies. It's absolutely fantastic. So guys, let's jump into this here. So when it comes to swing trading in the stock market, I definitely think there's a huge misconception that every trade one has to make a minimum return of a 200% return, and you're going to turn $100 into $20,000 now. That couldn't be further from the truth. Now, most swing traders, it's all about consistency. It's like going to the gym, and what I mean by that is if you go to the gym one time, you're not going to get in shape. If you go 2 times, you're not going to get in shape. It's the same thing with swing trading. If you have, one day where you make 200% and then you lose money the rest of the year, that's not good. I would rather see you guys hit base hits of 1, 2, 3, 4% per week and have that compound on itself than trying to swing for the fences every time and come up short. So this is a little strategy that I love and I would highly recommend here. So this is a recent trade that we actually took on Airbnb. Now, one of the reasons I absolutely love it is as we zoom out, we have this nice upward trend, pretty much where the stock has gone from about $80 all the way up to $170 a share. Now, after I establish that, the next thing I always like to do is just kind of draw some trend lines. I like to draw on some of the highs, and then I like to draw on some of the lows, just so I can pretty much establish, the overall parallel path of the stock here. So if I'm going to try to buy this stock, I'm going to try to buy it as close as I can to the yellow line. If I'm going to sell this stock, I'm going to try to sell it as close as I can to the top, right? It makes sense here. So the next thing that I do here is I have several different indicators that I use to determine if I should buy, sell, or hold. Now, the first indicator that I want to talk about here is this green squiggly line. This green squiggly line is what we call the RSI line. It stands for the Relative Strength Index. Pretty much tracks momentum inside the company. Historically, anything pretty much over, anything over like a 70 is going to be considered, overvalued. And you guys can see the last time it was trading for a 70 was right here, and we had that little sell-off, as well as right in here where we had some sell-off here. So anytime normally it's above a 70, it's going to be kind of a little overvalued, and we could possibly have some sell-off. Now, as far as it go for, being able to enter the position, for me it's under a 30. Some people say under a 20. It's all preference. Now, this was trading for near and around a 24, and the last time it was trading for a 24 was right in here where we had this nice move shortly after, as well as right here. So we have an undervalued spot on the RSI. Now, the other indicators we use and that I love here is the red line and the blue line. Now, these are what we call moving average lines. Now, moving average lines, they act as trend indication as well as support and resistance. When the stock is above it like it is up here, you guys can see it actually hits these lines several times and we get buying pressure there. So if you're going to try to buy this position, so now you're like, okay, I got to buy it as close as I can to this line and around this and around the moving average lines. Now, the blue line is going to be the 90-day moving average line, and then the red is going to be the 200-day. So the 200-day moving average line is going to be a harder support and harder resistance than the 90. So as we zoom out, you guys can kind of see like when the stock fell below it kind of hits it as resistance as well as old support, so stocks just have these basic tendencies of, getting buying pressure when they're above it and selling pressure when they're below it. You guys can see just natural sell off on that line. So now what I do is I say, okay, we're on a support line. We're undervalued on the RSI. I'm going through a checklist to determine if I should buy this position. Now, one of the things here that I do want to talk about is going to be this. You guys can see where we had this good gap down in the matter of, one trading session. So you guys can see it actually was about a 5% sell-off here in a single day. So this is because of an earnings. Now, the thing about the earnings report is they actually beat expectations, but they fell short of future guidance. So what that means is as of right now, the company is doing very, very well. They kind of just said, hey, for the next upcoming quarter, expect possible slower revenues and a variety of other things here. So, but one thing that I know is any action with the stock market is often an overreaction. And what I want to show you guys here is a stock that we've traded in the past, and it's Google. When Google announced, an earnings report here in the past here, you guys can see that it announced a very similar earnings, fell short of expectations, and then it actually rallied its way up. Even in here where it beat expectations, it slowly sold off. Just because the stock squeezes up, or down, doesn't mean it's going to stay in that direction forever. So let's go back to Airbnb here, and we can talk about it some more. But so I definitely think we could see a nice move in the short term, at least up to the 90-day moving average line, which is going to be the 153 area. So what I always do is I want to draw this trade out. So if we hopped in right here at 147, we set our stop loss, below the 200-day moving average line, and we have our profit up here. We could even adjust that, make it a little tighter. So we're risking $1 to make 380, or to make $1.38, excuse me. But if we can get a push back up to recent levels, it jumps from a 1 to a 2, risking $1 to make $2. And so I do think this is a pretty fair trade, as well as I do think Airbnb just does carry some long-term potential in general. So, for swing trades or even a long-term hold on this one, I think it's worth having at least in my portfolio for a possible trade or long-term investment. But this is a very, very easy strategy that you guys can do to determine if you should buy a stock for a trade, and finding these undervalued stocks just for trading in the market. So hope you guys all enjoyed it. If you have any questions, feel free to ask down below. And if you guys want to learn scanners and stuff like that for finding these stocks, check out my school. Code YouTube, 20% off, and I'll see you in there. Like, subscribe, and we'll see you guys in the next one. Take care.